Hi, I'm Jonathan, and welcome to My Compound Life. Building wealth one habit at a time. Now I am living it. This channel is all about helping you build real wealth. Not overnight, but over time, by focusing on three pillars: build assets, build habits, build freedom. I'm going to share something deeply personal but incredibly practical, why I believe getting from zero to just 0.1 Bitcoin could change your life. Now, I know that might sound like a small goal, but once you understand the full context, scarcity, market cycles, long-term compounding, you see why this little slice of Bitcoin can play a big role in your financial future. Here's what I'll be covering today: my first crypto steps, why Bitcoin felt out of reach and how I chased the wrong coins, what I got wrong in the 2021 bull run, and the mindset shift that followed, how I invest now, clear, consistent, and diversified, the Bitcoin halving cycle, why it matters, and where we are in it today. Scarcity versus demand, why institutions are stacking and retail, you and me, yourself, is running out of time. Why just 0.1 Bitcoin could be enough, and what it might be worth in the future. How it all connects to My Compound Life and how you can start yours. Whether you're new to Bitcoin or already on your way, I want this episode to give you clarity, conviction, and confidence. So let's dive in. I bought a tiny amount of Bitcoin through localbitcoins.com. I don't think the site even exists now. Just enough to test the waters. But even back then, Bitcoin already felt expensive. It was shooting past $15,000. And I thought, I've missed the boat. So like many beginners, I turned to some other coins. At that time, it was Ethereum. It was cheaper, it was exciting, and I told myself a story. Maybe Ethereum will be the next Bitcoin. Maybe it'll hit 10K or even 15,000 one day. So I began pound cost averaging into ETH around $700 to $8,000 I spent. I kept buying for 4 months, and then the market crashed. Prices fell and I froze. I didn't know how to handle the volatility, so I stopped investing completely. But here's the truth. If I had understood the difference between Bitcoin and other cryptocurrencies, I would have never bought anything but Bitcoin. I would have kept stacking it slowly, consistently, with conviction. I didn't know the difference between decentralized, fixed supply, censorship-resistant asset like Bitcoin, and speculative tech coins chasing hype. And because I didn't know, I got distracted. So the key points I want to bring out: I wasn't investing at that time. I was dabbling. And without a real understanding, you don't build conviction. Without conviction, you won't stay in the game long enough to win. Fast forward to 2021, Bitcoin was everywhere, 60,000 US dollar and climbing. I logged into my old wallet, and to my surprise, the tiny stash of crypto I had grown 14 times, 14x. That moment should have been my confirmation to stay focused on Bitcoin and build long-term conviction. But I hadn't yet fully understood market cycles. So what did I do? I jumped in again, but this time I went in heavier. I started buying a bunch of other cryptocurrencies, altcoin, meme coin tokens, NFT, any hype projects, and so forth. Some of them seemed promising, others were just FOMO-driven plays. And that was a mistake, because even today, I'm still holding a handful of these tokens. Some are worthless, some have gone completely under, and many are still deep in the red. If I could go back in time, I wouldn't touch any of them. I would just stick to Bitcoin. Because here's what I've come to learn. There is no other crypto like Bitcoin. Bitcoin is in a class of its own. It's not just digital money or crypto. It's a decentralized, scarce, secure store of value, and the only one with a track record of surviving every single cycle. So here's what I told myself back in 2021. Yes, I made the wrong move chasing altcoins, but I'm not leaving the market again. I'll stay through the highs, the lows, the sideways chops, because I've learned that everything in crypto conforms to the Bitcoin halving cycle. And if you're new, this is important to know. The Bitcoin halving happens on every 4 years, like clockwork. It's built into the code. When it happens, the reward for mining new Bitcoin gets cut in half, making new supply more scarce and mining more difficult. That's where the name Bitcoin halving comes from. Historically, these halving marked the beginning of a new bull run about 12 to 18 months later. So I told myself, no matter what, I'll stay in because I want to catch the next wave and not watch it from the sidelines. And honestly, if you're a new investor, that's the smartest decision you can make. Bitcoin is one of the only assets in the world with predictable cycle. The worst case scenario, you wait 4 to 5 years and the cycle recovers. In the traditional financial world, some market cycle can take up to 10 years or more to bounce back. Bitcoin is faster, it's cleaner, and it gives you multiple chances if you're willing to stay the course. So here's how you build habits in investing in Bitcoin. You don't need to guess the top or time the bottom. You just need to stay in the cycle and keep stacking through it all. After learning my lesson chasing altcoins, I definitely returned to Bitcoin, but this time with clarity and purpose. No more dabbling, no more distractions. I automated my buys, created a system, and stayed consistent. Regardless of price, this is where conviction started to take root. But let me make one thing clear. While I've been consistently pound cost averaging into Bitcoin, it's not the only thing I invest in. I also regularly invest in Tesla shares, index funds, ETF, and I've been building my UK and overseas property portfolio too, expanding across rental income opportunities. So this episode isn't about telling you to go all in on Bitcoin. Honestly, if I had understood the power of it earlier, maybe I would have done the same. But my compound life is not about hype. It's about balance, consistency, and long-term wealth building across multiple streams. I'm here to show you what's been working for me and encourage you to build your own compound life in a way that makes sense for your risk tolerance and goals. The goal isn't to bet big on one thing. The goal is to build a system, stack your assets, automate your habits, and let compounding do what compounding does best. Quietly work in the background while you focus on living your life. In 2022, Bitcoin dropped from its all-time high of 69,000 US dollars down to around 15,000 US dollars. It was brutal. Sentiment was at rock bottom. People were calling Bitcoin dead again. But this time I didn't flinch. I kept stacking. Why? Because I finally understood how Bitcoin cycle works. Bitcoin doesn't just move randomly. It follows a powerful rhythm known as the halving cycle, baked directly into the code. Every 4 years, the Bitcoin network undergoes a halving event where the reward given to miners are cut in half. That means new supply drops significantly, while demand usually stays the same or increases. First halving. Back in November 2012, Bitcoin surged in 2013. In the second halving, July 2016, and Bitcoin peaked in December 2017. On the third halving, May 2020, Bitcoin hit 69K in November 2021. In the fourth halving, April 2024, which is the recent halving, which also means right now we're halfway through into the 12 to 18 months window. So while the market's been shaky with headlines about inflation, interest rate, and even Trump's proposed tariff, I've stayed in. Why? Because I understand the cycle. And when you understand the game, you don't panic during halftime. And of course, there are more things goes beyond just the cycle itself. We'll go into more of that, such as the global M2 liquidity. How do you go about in monitoring that in other future videos? If you're just entering the space, or if you've been through one painful dip, I urge you, study the Bitcoin cycles. Look at the charts, zoom out, go back and look at the 3 previous halvings and what happened afterwards. When you do, you'll notice the rhythm, the pattern, the compounding momentum. And that knowledge, that's what built conviction. Because when you truly understand how Bitcoin moves, you stop reacting to headlines. You stop trying to time the market. And most importantly, you stop getting shaken out by volatility. Once you start to build asset, you'll also be building freedom. Freedom comes from clarity, and clarity comes from doing the work, learning the cycle, trusting the process, and showing up every month, no matter the noise. Let's talk about something that I think most new investors don't fully grasp yet. Bitcoin is being bought up fast by some of the biggest financial institutions in the world. First, a reminder, there will only ever be 21 million Bitcoins. Over 19 million have already been mined. And now, thanks to the April 2024 halving, only 450 new Bitcoin are being mined every single day. That's about 13,500 a month. Now, here's where it gets serious. Since early 2024, we've seen the launch of Bitcoin ETF. That's short for exchange traded funds. These ETF allows traditional investors like pension funds, family offices, and average people using retirement accounts to invest in Bitcoin without needing to manage wallets or private keys. And these aren't small firms. These are Wall Street giants. BlackRock, the world's largest asset manager. Fidelity, one of the oldest and most trusted name in investing. ARK Invest, led by Cathie Wood, known for backing disruptive innovation. Franklin Templeton, Bitwise, and others. Together, these ETFs now hold more than 1.15 million Bitcoin, and they're adding more every single week. And then there's also MicroStrategy, now rebranded as Strategy. They're not just a software company anymore. They become a corporate vault for Bitcoin. led by their executive chairman, Michael Saylor, who's been one of the most vocal and visionary advocates of Bitcoin as a monetary asset. And of today, MicroStrategy holds over 553,000 Bitcoin. That's more than any government or ETFs. These institutions are stacking Bitcoin like a digital gold. Why? Because they know Bitcoin is scarce. Bitcoin is decentralized. Bitcoin has no counterparty risk. And for long-term capital preservation, it's becoming a global store of value. Now let's do the math. 450 new Bitcoin are mined daily, but ETFs and institutions are buying up to 1,400 per day, more than the triple the available supply. MicroStrategy buys in bulks, thousands of Bitcoin at a time. Retail investor like yourself, myself, we're essentially fighting for scraps. And here's the scary part. They're not selling. These are long-term holders. And they're treating Bitcoin like digital real estates on the most valuable land in cyberspace. And you're not trying to buy a mansion. You're just trying to stack 0.1 Bitcoin before the price runs away. So buying Bitcoin, you don't need to be a billionaire to benefit from Bitcoin. It's open for everyone. You just need to act like one, accumulate early, hold long, and ignore the noise. Let's talk numbers, real-world, future-facing numbers. As of this recording, Bitcoin's total market cap is around 1.9 trillion. That sounds big, but here's the perspective. Gold's market cap roughly about $23 trillion. That means Bitcoin is still under 10% of gold's size as a global store of value. And the way Bitcoin works is simple. As more people and institutions adopt it, when market caps grows, and as the market cap grows, the price per Bitcoin rises. That's where the magic of compounding comes in. So let's project this out. If Bitcoin reaches 4 trillion US dollar, less than 20% of gold, one Bitcoin will equate to about $190,000, where 0.1 Bitcoin equates to about 15,000 pounds. If Bitcoin achieves an 8 trillion US dollars market cap, one Bitcoin will equate to approximately 380,000 US dollars, where a 0.1 Bitcoin of your investment will equate to about 30,000 pounds. If Bitcoin gets into 10 trillion US dollar market cap, one Bitcoin will equate to 475,000 US dollars, where your investment of 0.1 Bitcoin would equate to about 37,500 pounds. And this gets exciting, right? If Bitcoin achieve a market cap of 25 trillion US dollar, if Bitcoin becomes a global monetary base layer, one Bitcoin will equate to approximately 1.27 million US dollars. Your investment of 0.1 Bitcoin will equate to 100,000 pounds. So when I talk about the power of just 0.1 Bitcoin, this is what I mean. You're not buying a coin. You're front running a shift in global capital. You're positioning yourself early in an asset that's eating into bonds, real estates, gold, and even fiat currency, slowly and suddenly. This is what asymmetric upside looks like. A small manageable position with massive long-term potential. So Bitcoin doesn't just grow in price, it compounds in conviction. And if you understand the direction of the trend, even 0.1 Bitcoin could be enough to change your future. This journey from 0 to 0.1 Bitcoin isn't about getting rich quick. It's about building conviction, staying consistent, and letting compounding do its thing. My compound life means build assets that appreciate over time, build habits that keep you consistent through any cycle. Build freedom so that you're no longer trading time for money. This video helped reframe your thinking. Please like, subscribe, and share it with someone just starting their journey. And remember, the best time to buy Bitcoin, that was a decade ago. The second best, after you understand why, now is the time for second best. So that's it. I'm Jonathan. This is My Compound Life. Build assets, build habits, build freedom. I'll see you in the next episode.